And we continue live from the Loft 100 studios in sunny San Diego, California. Big Biz Show. 110 million TV homes strong. 150 radio stations. Thanks to Bloomberg Television, Bloomberg Financiero, BizTV, BizTalk Radio Network, and American Forces Radio Network. 175 countries and all the ships to see. That's right, we're TV and radio at the same time. Executive producer Greg Todoroff in studio today. Mike Costa. Mike, show me the picnic Costa.
Mike, I'm going to make you dizzy, Costa.
I got to make money somewhere. I rent myself out as a picnic blanket. Did you get that at the Ascot shop?
This is actually J. Crew.
Oh, nice.
Yeah, summer sale.
Yeah.
Thanks, honey.
They're making fashionable clothes in bigger sizes. Nice.
This is their Coleman camping tent line.
Hey, let's talk about gold. My good buddy Jonathan Awde is with us via Zoom today. He is the president, CEO, and director of Dakota Gold Corporation. It's a New York Stock Exchange company under the stock symbol DC. And I want to talk about a couple of things because not only do I want to talk about the Dakota Gold projects in South Dakota, I also want to talk about what's going on with the whole gold market, inflation, and everything else. Jonathan, thanks once again for slicing time out of your busy day.
It's a pleasure to be here. Thanks very much.
Hey, let's talk about overall gold market, because we always hear that gold is a hedge against inflation. We are in inflationary times. Well, inflation is cooling off. The economy still isn't all the way there yet. So where does that leave gold, in your opinion, top down as a market?
Well, I think there's two different markets that are going on. You've seen really strong central bank buying. So you've seen a very robust physical market, but then you've also seen a lot of paper contracts where there's infinite supply. But I think gold has actually held up relatively well given what's happened with the bond market and yields, and just given that there's likely going to be rates persisting for higher for longer. So the metal itself has actually held up very well. And I think as this either pivot happens or the expectation that there might not be a soft landing starts to really get baked into the market, I think you'll see money start to flow into the gold funds.
What's interesting there is if you think in terms of inflationary times, inflation is cooling off from its high back in June of last year. We were at 8-9%, highest in 40 years, down to where we're down to sort of reasonable inflation now. We're not in the 2s and 3s yet, and certainly interest rates have not followed that, which is a completely different story. But as far as gold goes, you've got an inverse relationship between bonds and interest rates. Talk about the relationship between bonds and gold for the folks that probably don't understand that as well.
Yeah, so I think if there wasn't the central bank buying physical and this really strong physical demand, with what's happened in the bond market, gold historically would have been down several $100s. And it's kind of been flirting with this, 1875, 19 and a quarter, and kind of really hanging in there. And you've seen the biggest central bank purchases in over 50 years. So I think that's another kind of trend that's happening, where you're seeing a lot of countries want to repatriate their gold holdings back to their own country, out of fear of it being confiscated.
It's almost like a form of quantitative easing, only in the gold market, right? I mean, which look at, we're the least dirty shirt in the hamper when it comes to buying our own bonds, selling them, profiting on them, and running the government. I mean, every company does it, but this is interesting. Talk about the inflationary picture where you see, because where I'm at, and this is just, you're waist deep and neck deep in gold every day. I'm neck deep in inflation and business and equities every day. This is what I see. I see, number one, that the lagging indicator of mortgage rates is happening right now, which is causing a bubble in the real estate market. Keep in mind, when the Fed increases interest rates, it doesn't affect mortgage rates. Mortgage follows the 10-year long bond. That mortgage or that interest rate increase that people hear about is the amount that banks pay to borrow money from the Fed. So let me tell you how this scam works. Remember when it was zero interest rates forever? Anybody ever remember having a zero interest rate credit card or car loan or mortgage?
Oh yeah, sure,
right?
sure. Yeah.
You never had a zero interest rate credit card. You had so the bank's borrowing it at 0% back 2 years ago. Your credit card rate was 19, 21%. Your car rate was 5 to 10%. Okay. Now they're borrowing it at a rate of, let's say, 4% or 5%. You're still not getting the deal here, but the interest rates are going up exponentially. This is why gold is so important, right, Jonathan? I mean, as a top-down, this is why gold really needs to be taken a look at, right?
Yeah, I think it's still a very under-owned asset class, and
I think so too.
You look at the deficits. The U.S. is running at some point spending $1 or $1.5 trillion a year just to service your debt. That's going to be a noose, and I think gold will be the asset class of choice.
Hey, Jonathan, last of all, I want to talk to you about your recent drill discovery, because that's an important one. Let's get to Dakota Gold real fast. I can't just use you as our market expert. We do want to talk about Dakota Gold. Once again, their stock symbol DC, but talk about the latest with you guys.
Yeah, so we announced a new discovery on May 4th called the JB Zone, which is in what's called Homestake Formation, which is the same host to what was mined for over 125 years in the Homestake mine, where 40 million ounces of gold came out of the ground. Still to this day, the largest single mine in the history of the U.S. So this discovery is the same kind of mineralization. In our press release from last month, we talked about this Western Ledge System discovery. So it's basically an analog to what was mined in the Western ledges, 7, 9, and 13 ledge, which ranged in size from 1 to 9 million ounces.
Yeah, and with respect to that, that's a huge gainer down the field for DC, because I know that you expected it, but when it comes to life, that's a big difference, is it not?
Yeah, over the last year, we've talked about this proof of concept. We had a geological theory. We've proved this geological theory, and now we're really starting to vector and sharpshoot to try to figure out how big this new gold zone and how big this new gold discovery is. But as I've talked about before, we have two kinds of gold mineralization that are present at our Maitland project, which is contiguous with the old mine. One is called the tertiary, which usually sits on top of the Homestake Formation, and we've got almost 10,000 feet of prospective strike length. So a lot of room. It's on private ground, and we've got 4 rigs active in the district, with 3 drilling at our Maitland project right now.
Very good. Jonathan, can't wait to get you back on the air next week. We need you. I'd like you on every day to do a gold report, damn it. Come on. Jonathan Awde, Dakota Gold Corp. Stock symbol DC. Go to dakotagoldcorp.com. You can find them on our website, bigbizshow.com. Also find them on my 100,000 plus social media followers. Get their info all the time at Sully Speaks Money. That does it for us. For Todorov, for Costa, for the day trader Quattro, the Q. Roll the credits. We'll see you tomorrow.